but it's growing. We've only started it a couple of years ago. So what we would do, Owen, is we would take advantage of the higher volatility when the crash comes. And again, I'm not looking for, as far as a crash. The market could crash any day, of course. I wouldn't be invested in it if I thought it was going to crash right now. However, I think that the market will correct. Again, Germany is going through almost a 10% correction as of today. It was down like 8.5% from the top to the bottom, because it topped out at almost 12,400 a week or two ago, and now today it got down to 11,400. So we're very close, 8.5%, 9% move already, and we'll see whether or not we bounce there. But the volatility's gone, in the VIX for the DAX has gone from 14 in end of February, beginning of March, up now to 23. So you're getting a much bigger premium now. So what I'll do, Owen, to take advantage of that is I would be more aggressive, and when the volatilities are high, in the stocks that I like. So again, I'm not going to go chase the highest volatility on the planet, because those are the ones that are going to get me hurt. But as far as Procter & Gamble, as far as Chevron, Exxon, I mean Disney, whatever it might be, I'm not so concerned that Disney, for instance, is going to drop 30%, because I think Disney's businesses are all sound, and even if there was some sort of economic downturn again, I think Disney would still be printing money, just not maybe as much, because people pull back and not spend as much. But I think that stock is not broken.
What's your thoughts? We're finding a lot of oil companies now that are extremely good value for money, trading below book value.
Agree 100%.
We're working with Seadrill, STRL, NBR, Chesapeake, CHK, SWN.
I'm in many of those right now.
Okay.
I'm also in the refiners, because the longer the crude stays relatively low, the better it is for them. They've got these big inventories, the oil companies do. They've got ships floating out there, as you guys know, this is not a secret, that are floating storage, that when it comes into market, who buys it? Because you and I don't buy crude oil, we buy gasoline or diesel. So the refiners, I think, are going to continue to do pretty well. So we're in those two, Owen. We're in Oasis Petroleum, OAS. We are in, let me see, several, I'll shoot you a list of the ones we're in. But we're in a lot of infrastructure plays, Halliburton, Baker Hughes. That's the same company really right now because of their merger. I mean, they should be pretty much trading lockstep. And so we're into those. Schlumberger, after this other big layoff that they've just done, we got back into that one.
Sure. Well, what sort of results do you for your clients? What sort of returns do you do per annum? Have you done in the past?
We've averaged right around 18%.
Per annum, is it? Mm-hmm. Okay. And that's pretty.
And we do a lot of options, just like you're talking about.
Sure.
Except we don't sell puts naked for those clients. We're owning the stocks for the dividends and so forth, and selling calls. And every once in a while we do those collar spreads where we buy an out of the money put, pay for it by selling the call when we're nervous about the market. I'm not particularly nervous about the market right now, even though the market was disappointed today in the GDP numbers. It should be disappointing. But I think lower for longer interest rates, and ultimately lower for longer energy, because I think as we go up, a lot of these companies are still going to be selling aggressively the inventories that they've left in the ground for now, like the fracking companies and things like that. We'll more aggressively bring that online again as we get closer to 60 here, and we're 58 something today for U.S. domestic crude.
Okay. So, any questions for John before we wrap it up?
Please.
You said